All right, everybody. Welcome back. Hit like and subscribe, and let's just jump into this video. So, International Flavors and Fragrances. This is a company that's been on my mind for a couple months, and I just saw a video on it the other day, and I think it's really fascinating. So, um, this is a wide moat company, and I'll explain it a bit here in detail in a second. But what if you could buy a company that literally was the number one dominant, widest moat company, a monopolistic company that is literally selling the things that appeal to humans' five sense: sight, smell, touch, taste, eyes. So that's what IFF does for the most part, and we're going to get into it. So, International Flavors and Fragrances is a company that produces mixtures or potions or components that basically give products, be them food or beverage or medicine or perfume, a particular scent, mouthfeel, flavor, or texture. It's really fascinating stuff, you guys. Um, so we're going to take a look at this business. We're on Qualtrum, a service I pay for, not one that I'm affiliated with. And let's look together at the metrics that are relevant. So, all right, here we go. IFF, large cap company, forward PE of 18, free cash flow yield of 1.13%. Dividend yield is 4.81%. I don't think this is a safe dividend yield. So this is going to be pretty fascinating, but this is actually like a 150-year-old company. And, looking at this growth, even before some acquisitions that are what's weighing on the stock price right now, even before this growth, this company seems like it was growing at a decent clip above inflation, a 150-year-old company. Looking at these numbers, it looks like the growth was in that 4 or 5% range each year for a good period of time and just moving up into the right organically. Okay. But there were some acquisitions, and that's what we see here in looking at revenue. So the acquisitions are doing something. They had an acquisition, I believe, in 18, a smaller one, and we saw the bump up in revenue there. Then there was a huge acquisition around this time, 21, and we saw a massive increase in revenue. So let's take a look at the stock price and see if we can figure out what's going on. So let's draw a trend line. We know that the price of a stock can do this, but sometimes or most of the time the value is just sort of more so moving in a straight line. So you can sort of see this long-term trend line. And let's get rid of this. Let's get rid of this trend line as well. It might just, at a quick glance, it might just suggest that the stock is somewhat or substantially undervalued. So let's see what the max drawdown is. I was messing with this last night, but when I was able to do it from the 5-year chart, it's basically down 57%, almost 60% from all-time highs right now. So coming back into Qualtrum, let's see what's going on with their free cash flow, which is just the bottom line of their profit. It's a little bit cyclical, but it's generally up into the right. And actually, I didn't notice this when I was looking just the other day, but they had an acquisition in 18 that drove their cash flows lower, but then they had a bump in revenue in the 2 years following that, and now we had an acquisition that happened here, a much larger one, and we've had declines, not in revenue, excuse me, but in the profit. So basically, they issued a lot of debt, which you can see here. They issued a lot of debt here and here to buy out these other companies in this 5 cents category: sight, touch, smell, taste, feel, whatever it is. So they issued a lot of debt, and they also issued a lot of shares. So we hate both of those things. They have had a track record of buying back shares in the past, but we see here that they've issued shares. If they've done that once, they might do it again, but maybe not, because we're going to talk about the acquisition they made. It's actually probably a pretty good one. But this is where we see some concern with the dividends. Their free cash flow is in a free fall right now. If a company's cut its dividends before, it'll likely do it again. So this would be a built-in buying opportunity that you could anticipate it somewhere in the future, potentially. So I don't think the dividends are safe. And if you're looking just purely for income, I'd look elsewhere. Like the video, subscribe to the channel. This is something else. So it's interesting. They've had let's go back 10 years. They've had really good returns on capital employed, or decently good for a mature company back then, but they're really having a lot of problems with profitability now. And this is a concern for me. But I would hope for their sake that this will improve. But right now, their capital allocation is a little bit substandard, and it might just be to do with all that they had and the integrations of the teams. We're going to do a last thing here. Look at the relative valuation, price to free cash flow. So the stock's cheaper than it's ever been. 150-year-old company. Let's just check in here a little bit more. Manufactures and sells cosmetic, active, and natural health ingredients for use in various consumer products. Europe, Africa, Middle East, Greater Asia, North America, Latin America. Operates in Nourish, Scent, Health and Biosciences, and Pharma Solutions segment. IFF, founded in 1833, headquarters in New York City, New York. So yeah, things that people feel or taste or smell, that was probably a good business model to go into. Almost more like a 200-year-old company that recently had as much as like 4, 5, 6% organic revenue growth year on year. That's a pretty big deal. This would be what would be referred to as a wide moat company. Insider transactions, someone sold it at a price higher than it was. He might have just wanted his third yacht. Okay. All right, let's keep it moving. So this is their bigger of the two acquisitions. And coming into this page, it's got the video, but you've seen enough of me, so we're going to keep pushing forward. So IFF completed a merger with DuPont's Nutrition and Bioscience business. So DuPont, another 150, 200-year-old business, one that's definitely on the swipe or on the slide down or a decline. So IFF saw an opportunity to buy some of their assets. Seems like IFF is a stronger company than DuPont. So it was probably a good buy. And there's other smart people who think it's also a good buy. So basically, a new global industry leader. This complementary portfolio gives company leadership position within taste, texture, scent, nutrition, enzyme, cultures, soy proteins, and probiotic ingredient categories. And here, this is just mentioning that they paid DuPont $7.3 billion in cash. So they took on some debt, and they also issued shares, which we don't love necessarily. And then here's all the different areas that IFF is offering these 5 cents components in: perfumery, pharmaceutical, personal care, home care, agricultural, also in food and beverage, dietary, animal nutrition. All right, so we know what this company is now for the most part. Here's some smart people. Morningstar. Oh, look, I'm back. These are smart people. This is where I first learned of the company. So I'll tell you this, just to give you a little bit of a heads up. As I'm about to do that, make sure to like the video, subscribe to the channel, please. Because of the massive issuance of shares and debt and the drop in free cash flow, I played around with trying to value this company. And when I just sort of went back to 2020, after their smaller first acquisition, if you were to sort of minus everything out for this acquisition and just assume that it doesn't materially drive revenue in a substantial way. So saying the acquisition had gone through, they continue to do good, but it doesn't turn out great. They pay off that debt and they reduce that share count. Basically the company looked like it was fairly valued to me at this time, but because of those metrics, the valuation on something that's as technical as this is frankly above my head. So we're going to do something a little bit different to finish out the video. So we talk about the price of the stock. Currently, it's a $71 stock. It's a $71 stock. So we're going to end right here, and we are going to, under fair use doctrine, just take a look at this to provide some education, commentary, entertainment on what they had to say about this. Let's tune in together.
Downside, but I do think it could take some time for these stories to play out. So as with any stock, but specifically with story stocks, I think investors really need to do their homework here, really understand what the underlying dynamics are, before they take a position. Because in some of these cases, it may still get worse before it starts to get better.
Your first pick this week is a stock we've talked about on the show before, and it's International Flavors and Fragrances. Morningstar cut its fair value on the stock and raised its uncertainty rating after the company reported earnings and the stock plummeted. So what happened, and why do we still think there's opportunity here for long-term patient investors?
Yeah, and I have to note, we actually cut our fair value twice this year, that most recent cut being by 7%. So at this point, the stock is rated 5 stars, trades at about half of our fair value estimate, and pays a 4.25% dividend yield. However, I think what's going on here is a lot of investors just feel burned, and they've just thrown in the towel, and they just want out of the stock. At this point, it's not just because of the tough near-term fundamentals, but I think some investors are just losing confidence in management. They've reduced their guidance 3 times over the past 3 quarters. So the results have been disappointing thus far this year. But I think in this case, you need to dig pretty deep into the specific of the results to understand the story. So our analyst that covers this stock did note that he does see some positive indications here. So first of all, he did note there's a significant difference between the company's specialty ingredients products versus their commodity-oriented ingredients. So on the specialty side, he did see an improvement in margin as they have been able to increase prices faster than inflation. However, on the commodity side, volumes are still falling. I think they fell about 20% this past quarter. So he did update our model. He reduced our forecast here for the short term on the commodity side to take that into account, and then is only looking for just relatively modest growth in the commodity side thereafter. But for the most part, our projections for the specialty part of the business is essentially unchanged. So we are forecasting that International Flavors and Fragrances will be able to raise prices in that business fast enough to recover cost inflation, but it will take some time. So taking a look at the stock right now, it's trading at about 18 times 2023 earnings, but it's a much more modest 14 times when we take a look at 2024 earnings.
So your second.
So there you go. What I would say is this is a deep value stock. It's tricky because it seems easy enough to understand. They're the biggest company in the world that deals with taste, scent, texture of products that all humans in the world consume. An international business, an almost 200-year-old business that's still moving right along. A very fascinating company. If you're patient and you're interested in deep value type stocks and you're prepared for some volatility, this is a company that should probably be around for another 20 years. And so those folks over at Morningstar think it's worth $180 or $130 a share. They've probably found some way to reconcile the drop in free cash flow, the increase in shares and debt, and to sort of normalize that, smoothing it out with smart analyst projections and then looking at future cash flows. So if it's trading for 70 now and they say it's worth 130, if you just take that and cut it in half, maybe it's okay up to $100 for someone who's a long-term patient investor. So it's a simple enough company to understand, but with a lot of moving parts, and it's probably it's probably the numbers side of it and the moving parts and the different segments and the different variables, the cyclicality, exposure to commodities, international markets. I probably won't buy it, but I find this to be super duper fascinating. I hope you did too. And if you did, you're going to make sure to like this video and subscribe on the way out. Bell post notifications on. I will see you in the next one. Thanks a lot. This is not financial advice.